All right, welcome back to the Chermane Trades Mentorship, episode 3. In this lecture, we're going to be covering how to use the economic calendar. Let's get right into it. So, what is the economic calendar? The economic calendar tells you the day and time at which news events will be released. Okay, these news events can invite manipulation or cause price to move violently fast. Okay, but this can be used to our advantage. It tells you in advance which days are likely to be high resistance or low resistance. You should always check the economic calendar before each new trading week and before each new trading day. Not doing this invites risk that can liquidate you, meaning you can lose a lot more money than you have in your account if you're trading and you don't realize that there's news coming out. Okay, so you always want to check the economic calendar before the week, before the new trading week and before the new trading day. Okay, it's very important. That is a must. That is not tangible. For the sake of the teaching, we'll use Forex Factory for economic calendar. There's a couple other websites that people use when it comes to economic data and whatnot. For the sole purpose of this teaching, we're going to focus on Forex Factory. It's one of the most popular websites. Okay. Now, important rules when using the economic calendar. For one, major high-impact news drivers typically include CPI, NFP, and FOMC. These aren't your only high-impact news drivers, but these are like the big dogs, okay? And there's a couple others, but by far and large, these three here these are the news drivers that every trader pretty much has circled on their calendar, okay? These can really do the damage on you if you're not careful, if you're trying to trade it, if you're gambling. Okay, these are what we look out for on the economic calendar. Next, we do not care about the actual data that is released. It is not important. Okay, so I don't care about the inflation number or if we have NFP, which stands for non-farm payroll. I don't care if the employment data was good or bad, or none of that matters, okay, as far as intraday trading. Now, if we're talking about interest rates for longer term trend, that's different. But as far as finding setups intraday, I do not care about any of the numbers that are released, okay? The news is simply a smokescreen. It is used as a catalyst for manipulation or to move price to a desired higher time frame price level. So if we're looking for a buy side level or a sell side level on the daily or weekly chart, a lot of times we'll use that CPI or NFP or that major high impact news driver to take us there. Okay, so it's like a smokescreen. I don't care about the numbers and the data. I just understand that that volatility is going to be used to take us to levels on the daily. All right. Next, we do not trade minutes before major high-impact news releases. This is gambling. This is gambling, casino, Vegas, all right? If we have CPI and NFP at 8:30, we are not trying to put on trades at 8:27. We are not doing that. We're not trying to get in the market at 8:29. We are not doing that because what you fail to realize is you're not going to get that filled. If you're trying to buy the second before that NFP candle or that CPI candle, and you think you're just going to get that fill and take it higher, you're going to get a terrible fill, slippage. Your stop loss is not going to get respected. Just don't do it, okay? Don't do it. Check out this clip right here. This guy will tell you better than I can.
Come on, just keep on moving. Come on, man. Bounce back up. Come on. Oh, oh, dude. What the f? I just lost $1,500. What the f? Oh, oh, no.
Yeah, don't be that guy. So that's what can happen to you if you try to trade moments before CPI, NFP, or any major high impact news driver. You're going to get cooked. Don't do it. Trust me. Next, we only care about medium or high impact news drivers. Okay, I don't care for the yellow folder news, and we're going to log on to Forex Factory and look at examples of that, but I don't care about the yellow folder or anything like that. Medium or high impact news drivers is really the only thing I care for. And last, okay, trading the session before or the day before a major high impact news driver can be more difficult. The market will likely stall until that report is released. So let's say we have CPI, okay, inflation data tomorrow morning. Is it wise to trade the London session right before that morning AM news? Probably not. Okay, let's say we have FOMC in the PM session. Is it wise to push really hard that morning? Probably not, because we know that the market is likely to stall until the PM. If we have CPI news at 8:30 in the morning, then overnight you can expect the market to kind of stall around and be kind of quiet because we're going to wait for that CPI news driver. So the day before a major news driver or the session before a major high impact news driver could bring high resistance. So those are some important rules to consider. Ideal days to trade. Okay, NFP week is typically the first Friday of every month. Okay, not always, but typically. And Monday through Wednesday up to 11 a.m. of NFP week is when ideally you want to finish most of your trading. And then any day with a morning session, medium or high impact news driver, for me, is an ideal day to trade. A lot of people will say, I don't want to trade days with news. They think news is scary. That logic is backwards. You want to trade days with high impact news. The problem is people trade it wrong. They try to trade before CPI or before FOMC, or they're trying to gamble and catch that crazy 500-point move on a 1-minute chart when the news announcement comes out. That's wrong. Okay, I love trading high impact news days. I love trading days of CPI, NFP, any high impact news drivers, even if it's not one of the major ones, because I know once that news driver hits the market, it's real easy to see what did they run for, which buy side did they take out. Okay, if I'm expecting lower prices on the daily chart and CPI just ran up and took out a lot of buy side, that sets the stage for us to go lower. So that's why I'm saying that high impact news and the manipulation that comes with it can be used to our advantage. But we're going to get to that later in the lectures when we cover daily bias and things of that sort. So now that we have that, ideal days to be cautious or just avoid altogether. Okay, no news Mondays. So if it's a Monday and we don't have any news, ideally that day can be a little bit high resistance, harder to trade, with the exception of being NFP week. If it's NFP week, again, remember we talked about, we want to trade Monday through Wednesday up to 11 o'clock. Even if it's a no news Monday, that only applies to NFP week. If it's a bank holiday, I don't like trading bank holidays. The volume tends to be a little less. Or the morning session after bank holiday, that could be a little lethargic as well, as the markets still try to get in sync after an early close. Usually bank holidays, the market would close at lunch or just be closed altogether. So next, the session or day prior to CPI, FOMC, NFP. That's what we talked about in the previous slide. Empty days before red folder days. So let's say we have a high impact news driver tomorrow, and it doesn't have to be one of these three here. It can be like a PPI or consumer confidence, something of that sort. If we have high impact news tomorrow and I'm planning on trading today and there's no news, I'm going in there with a little caution. You can trade it, absolutely, but just know if we have no news today and high impact news tomorrow, then it's likely that we can just stall around and not really move too much, because we may just want to wait for the report and the manipulation that's going to take place tomorrow. All right, and last but not least, Thursday of NFP week. That's just a rule of thumb. Okay, whenever we have NFP week, your market conditions and your probabilities drop off after Wednesday morning. Okay, so Thursday and Friday up to 8:30 of NFP week can be high resistance, can be a little difficult. Now I'm adding this disclaimer at the bottom. You can absolutely trade these days and make money. You can do it. I trade these days, sometimes, not always, depends on what the daily chart's looking like and how we look like at the opening bell. But you can absolutely trade these days and make money, but understand that that requires more experience, because those days can be a little bit more difficult and high resistance. And for now, for the sake of this mentorship, we're only focusing on low resistance days. Okay, remember what we covered in lecture 1. So can you trade all these days? Absolutely. But as you're developing, it's best to be cautious, tape read, paper trade, or just sleep in. Okay, trust me, take my word for it. It'll do you better. Now, with that brief introduction into the economic calendar, let's go ahead and head to Forex Factory and see what it looks like visually. Let's go. All right, so we're going to do this kind of quickly, but here we are on Forex Factory. You can see forexfactory.com. And if you're loading this up for the first time, you have to make some adjustments. So first thing, this clock here is set to my local time, which is not correct. Okay, that should always be set to New York local time or Eastern Standard Time. So you want to go ahead and click that clock. See, it's in Central Time. That is incorrect. We want Eastern. And the same thing should apply to your TradingView charts. Okay, so your TradingView charts should also be set to Eastern Time, New York local time, so that way your economic calendar and your price action are in sync. Second, I don't trade Forex, so I don't care about the pound or the euro or the Canadian dollar. Only thing I care about is the USD. Okay, I trade futures, so I only care about the dollar. But if you trade Forex, then you would just go over here to filter, and you would filter the pairs that you trade. But I could care less about Forex, so we're going to take all that off. And I only care for the dollar index. And then remember what we covered. I only care for high impact, medium impact, and this white folder here is like bank holidays and things of that sort. So yellow folder, which is low impact, don't really care about it. I just want these three here. I want all of these, and I only care about the dollar. Apply filter. So now you can see here is Friday's trading. I like to go to this here, click it, and do the entire week. So Monday, March 10th, all the way to Friday, March 14th. And here you can see the economic calendar for the entire week, and it's only including USD news, since I only care for USD, I don't trade Forex, and it's only counting high impact, medium impact, and bank holidays if we had any, which we don't here. And it's all in New York local time, just like my charts. So let's say today was Sunday, March 9th, and it's time to look into the new trading week. This is what I do every Sunday. Okay, I outline the week here, and I just browse through it. So Monday, okay, we have no news, and I'm looking through this. We also have CPI on Wednesday. Well, if we know CPI is one of those major high impact news drivers, everybody has this circled on their calendar. Okay, everybody's going to be looking for this, report. This is the main focus for the week. So if we have no news on Monday, and we already have the understanding that everybody's focused on this number here, is it likely to see a really clean, just fast market, one directional price action, real easy? Can we expect that on a Monday with no news before CPI? Probably not. That's a day where I would probably sleep in, and I wouldn't be interested in trading. Tuesday, I would be interested in trading this day, but Chermane, is before CPI. Yes, but this is when we have to use a little bit of common sense. All right, 10 a.m. news, we like that. Okay, 10 a.m. news, any high impact, medium impact news driver invites volatility. Okay, that invites manipulation. And once we get that, once that manipulation hits the marketplace, once that news comes out, then you can go in after and looking for a setup. So even though it's the day before CPI, I'm expecting movement around 10 a.m. and that could be a catalyst for me to take a trade. Now, if we didn't have any medium or high impact news on this day here on Tuesday, then I'll see that as low probability because it'll be an empty Tuesday ahead of CPI. But that's not the case here. Wednesday is a good day to trade after 8:30. Okay, I wouldn't be interested in trading at 7:30. I wouldn't be interested in trading London. Now, London, okay, let's say you're trading at 3 a.m. and we have CPI at 8:30. Is it reasonable to expect clean price action during that London session when you have CPI just 5 hours away? Probably not. What's likely to happen? Market may stall around. It may just consolidate. It may just be quiet, engineer liquidity, because everybody's focused on this here. Okay, large funds, institutions, deep pockets, they want to see what that inflation number is at 8:30, and then they'll go in with that information. You don't want to be doing too much before that, okay, especially not hours before. Just wait till 8:30, let it do its damage, then go in after and get your setup. All right, Thursday and Friday will be great days to trade. CPI is already behind us. That manipulation has already hit the market, and we have morning news drivers. And whenever we have high impact or medium impact news, we know that manipulation is going to take place. And if we know what we're looking for on the daily chart, and we see that manipulation align with that idea, then we can go in after and find a setup. Okay, so that is how I like to use the economic calendar. Okay, I just kind of break it down at the start of each week, and before each trading day, I'm referring back to this economic calendar. Okay, so if I'm trading Monday, okay, Chermane, remember CPI on Wednesday, and we have no news today. Be a little cautious if I am trading. Tuesday, all right, Chermane, we have CPI tomorrow, but we have news at 10, so you can find a setup, but just be a little bit more cautious. We know CPI is the main event. All right, Wednesday, Chermane, don't trade before 8:30. Let CPI do its thing, then we go in after. Thursday, Friday, bread and butter days. All right, so let's go back to the slideshow and wrap up this lecture. Okay, so you want to give yourself permission to avoid these days when you're still developing. There's nothing wrong with that. You're actually doing yourself a favor. Okay. Now, homework assignment. I want you to go into Forex Factory and look at the economic calendar for the past 4 weeks. For each week, determine which days are likely to be high resistance or low resistance, and which days/sessions are more ideal for trading based on what we learned today. See my examples in the next slide. So here, this is what I would want you to do for at least 4 weeks. So this is the example we covered early in the video. Monday, March 10th, I have some text here. This is a no news Monday, and we have CPI on Wednesday. The market can likely be choppy and difficult this day. Tuesday, this can be a good day to trade. It's the day before CPI, yes, but the 10 a.m. news can bring movement, and that's what we want. Wednesday, it's a good day to trade after 8:30 manipulation takes place. So let that CPI do its damage, and then we go in after. Thursday, another good day to trade. We have an AM news driver. That's what we like. And then Friday, another good day to trade. We have AM news drivers. That's what we like. So this should be a homework assignment. You want to do that for at least 4 weeks. This right here is just 1 week, and you need to do that 4 times, okay? A little bit extra would be to go into your charts and study these days. If you have a no news Monday, go into your chart that day. What did it look like? Okay, if you have CPI on Wednesday, go into the London session right before CPI. What did that session look like? Did it look high resistance? Did it look low resistance? And you should know what that looked like based on lecture 1. All right, so that is it for this series. Hopefully this brought some insight for you and you can apply it to your trading. This is literally something you can apply to your trading tomorrow. It's nothing too crazy, it's not rocket science, but this can seriously save you a lot of stress, a lot of money, and a lot of mental equity. Okay, so we only want to focus on days that are in our favor, and this is one way that we can do that. Love you all, and I'll see you all in lecture 4 when we cover daily bias. Okay, peace.